gonna be green today? Is the dollar gonna be red today? We don't know. All we know is that this morning we didn't tank right out of the gate after the jobs report, but what we did do is we got within 3 cents of 607. Holy smokes, talk about getting to a line and perfectly bouncing off of it. Good lordy. Within 3 pennies of 607. You got to trust the lines. You know, this morning in the Alpha report, we were, and then the Course Member live stream, we're like, you know, we need a t-shirt that just says, trust the lines, baby, trust the lines. So, you know, fascinating here. We've got some mixed data sets. We had the jobs report wasn't great, but not terrible. But then we got, you know, some nasty S&P numbers. We'll have to go through some of those flash PMIs in just a moment. So we'll go through some of those. Not the nicest numbers over here, honestly, not great. And so some of those came out at 7 a.m. They kind of threw a little bit of a curveball into what otherwise could have been okay numbers. And, you know, the headlines that we're getting across the board now are just 4.6%, highest in more than 4 years on the unemployment rate. We've got broadly, you know, other news that's going on. Let's go take a peek. Let's go to the information. What do we have here? Ford halts electric F-150 production, expands use of Chinese technology. Now, that's an interesting one. Let's understand a little bit what they mean with this Chinese technology aspect here. And I wonder if they're talking about, you know, I mean, not batteries, presumably, if they're talking about you know, halting EV production, but let's find out what they're talking about with Chinese tech. Is it ADAS maybe? Chinese ADAS? So Ford halting production of F-150, F-150, the electric version of it, and will reintroduce a plug-in hybrid. That's actually Toyota's point of view. Well, going back to plug-in hybrid approach. Now, keep in mind, that's been Toyota's strategy. In fact, the previous CEO of Toyota got kicked out for saying hybrids would be the future, not fully, you know, pure battery electric vehicles. It's very interesting. So you're seeing Ford go back to hybrids. Then we've got the company has also sharply cut plans to make batteries in the United States and is more likely to spark controversy in Washington. Will expand its use of Chinese technology in batteries it does produce. See, that's what, like, when I first saw this headline, I'm like, are they talking batteries? Because what else are they talking about? But what are you using the batteries for? To produce stationary batteries, Ford said will use Chinese technology to produce stationary battery storage for data centers on the grid. Okay, so not cars. Ford wants stationary batteries using Chinese battery tech. Okay, so not for cars, Okay, interesting. Okay, so they're going to take a big write-down. Industry-wide pullback from electric vehicles because of a general misreading of how fast consumers outside of China would switch from gasoline cars. VW temporarily shut down its EV production of 2 plants in Germany in September. 2 months later, GM cut both EV and battery production in the United States. Ford has sold about 25,000 Lightnings this year, suggesting we would fail to beat last year's numbers, and now they're killing it. The move behind the Lightning is that many truck users want to tow heavy loads, but when they do, the battery's range drops significantly. Yeah, and I think range anxiety is just a consistent functionality problem that people have when it comes to electric vehicles. Now, don't get me wrong, like, I'm, you know, all over on Teslas, but man, you know, like, as just a person who's been driving electric vehicles, you know, since 2017, I have to say there's something about me hopping in the Sprinter van and going, you know, I don't care if I'm going to drive down to LA. I don't have to, like, pre-plan it. I could be spontaneous. I could fill up at a gas station if I want to. I don't have to sit in line at a supercharger station or worry about the stations being down or worry about low power, you know, flow or whatever. Like, all that is just full bull crap, honestly. Like, I hate that about the Teslas, but in fairness, I love everything else. You know, I love the suite. I love the full self-driving, obviously. You know, the build out, the infotainment on the inside, it's all amazing. It's great. So, you know, not a surprise to see some of this pullback. But a little bit surprising to see this with the Chinese batteries. That range anxiety, though, range anxiety seems to be killing that next phase of EV adoption, right? And I really don't blame it. Adoption. Like, I definitely empathize with it as an EV owner. So, okay, what else do we have here? Small bank critical to stablecoin payments tightens risk controls. Okay, lead bank has emerged as a major link between stablecoin startups and traditional financial systems. But lately, signs have emerged that both the bank and stablecoin clients are tightening their risk controls, potentially making it harder for companies to operate. Stablecoins are growing in popularity. In a sign that the bank is worried about customers taking on undue risk, lead bank in recent months has curtailed services with some stablecoin payment firms. Interesting. Adding restrictions on which countries and sectors it will accept clients from. Huh. Okay. So, few banks are currently willing to process dollar payments for stablecoin users. Interesting. Okay. For a long time, they were the only game in town. If they were to tighten the compliance program, it could have a real reverberation on any stablecoin companies that use them. All right. Interesting. I mean, I don't blame banks for wanting to make sure their compliance is tight. You know, now does that mean they should go around debanking as many people as they do? Probably not. YXAI has an uphill battle. Okay, we talked about that. ServiceNow sell-off highlights jittery market. Yeah, how has Now been? Let's go take a look. Wow, look at that 607 hold there. Let's go to ServiceNow. So ServiceNow has, oh yeah, look at that, coming off 1,200 over here. Wonder what peg they're selling for right now. Let's go find out. Okay, so if I hop into ServiceNow, just to get a little bit of the fundies over here, ServiceNow and financial analysis, I've got ServiceNow right now sitting at about 1738 on EPS growth, 770 divided by 1738. Puts me at trading at about 44 times earnings. And I've got a growth rate of, looks like about 18%. Just spitballing that, 18%. Puts me at about a 2.4 peg. Seems to be reasonably valued at where it is. But that's only because of this recent downtrend that it seems to be getting into this sort of like quote-unquote reasonably valued place. All right, we did some fundamental analysis on Dollar General this morning. Looked a little bit at some other stocks in the Alpha Report. Not part of that yet. Make sure you join over at meetkevin.com. Get that lifetime access. Okay, so we saw Roomba Maker goes bankrupt. Let's go see what the FT has for us. So the Trump back channel, how diplomacy works in Washington. Oh, I could only bet it has everything to do with donations and grift. But let's find out. Republican congressman whose district abuts Trump's second White House in South Florida. Let's see here. Perpetually set with bottles of water. The guests arrive daily from embassies around Washington and capitals around the world. The day before had been Nigeria, Turkey, Azerbaijan, Taiwan. They all come prepared to sell America on what they have to offer, says Mast, who chairs the House Foreign Affairs Committee. Right. I mean, that's politics, right? So every last one of them comes in here with, we have the greatest quality of this mineral, or the greatest quality of this mineral. Okay. I like the new trend, he adds, struggling to find another metaphor. The new it. We call it the new handbag, he says. Everybody brings this handbag. If transactional is one of the defining themes for Trump's second term's foreign policies, asking not what Washington can do for a foreign country, but what foreign countries can do for Washington, is a key characteristic. Policy by personality has replaced institutions that underpin the United States. Instead, the State Department There is a real estate developer, Steve Witkoff, the president's longtime friend and business partner, turned special envoy for peace negotiations, who flits between Moscow, Jerusalem, and whatever. All right. At his side, Jared Kushner, venture capitalist, Tom Barrack, campaign donor, serves as ambassador to Turkey. Trump's daughter, Tiffany, has presided over a business empire in West Africa. Unsurprisingly, Lebanese father-in-law to Trump's daughter, Tiffany. Oh, I see. Okay. Is also Trump's envoy, right? Gone are the traditional channels of advice and oversight and the hierarchy of policy engagements. It's all friends. Circle of people is just shockingly small. Maybe that gets more things done. Let's see. Every administration has its envoys, but even then, veteran public servants note the agency function. Now, America's diplomacy capacity is being decimated from within. Nobody keeps them in check. All goes to Trump's desk after all. All right. Befriending, Buenos Aires, Trump's share of appreciation for autocrats, detained for the process. People, blah, 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 we're happy. Okay, got it. Administration argues Trump's transactional nature benefits the American people. U.S. needs to alleviate debt. So yes, fire people. All right, we get it. I mean, none of that is really a surprise in terms of how we expect the Trump admin to operate. So that's no biggie. All right, let's see. China's escalation dominance over Trump. Bullish investors pile into stocks as cash levels sink to record low. Well, let's take a look at this. All right, so we've got global asset managers. Cash holdings have fallen to a record low. Is this, oh yeah, this is per, dropped to 3.3% in December. Oh, that's bearish. Let's go see if I could find that fund manager survey. The Bank of America fund manager survey is always a really interesting one because it is a little bit of a barometer on risk appetite out there. So if I go to BOFA, let's see here. Margins, hedge fund update, productivity. I don't actually see that yet. Maybe they have it and I don't have it yet. There's always that possibility. But that's interesting, man. 3.3%. They usually say the market's a hard sell when you get to like 3.9. So let's pop a couple of these puppies up. Okay, what's happening in hedge funds? Sector rotation. There's been a rotation. We know that. Technology, media, cash poor. According to the Global Fund Manager Survey, here we go. November fund manager sentiment was the most bullish since Feb of 25. Well, this says cash levels have declined to 3.7, which is bearish. That's contrarian bearish. Concerns about the AI bubble have continued to tick up, and concerns due to a credit event. So that's not great. Okay, let me go in here. Let's see here. Let's see. A lot to digest in CPI. Looking for this is just sort of a catalyst look here. So this isn't too particularly useful. Okay. So let's go look at the FT's piece then. And Qs are bouncing off 607. A little bit of a bounce there. Let's go back to FT. So we have just 3.3% in December, down from 3.7. There's that 3.7 in November, according to the latest survey. Lowest level since 99. Wow. That's actually kind of a big deal because Bank of America says you move into, like Bank of America calls that a hard sell. As in like, you should really sell. Bank of America, so we'll say Bank of America reports cash levels are down to just 3.3%, calling this a hard sell contrarian indicator. Yikes. Yeah, that's not good. I'm gonna throw that into the Bank of America Fund Manager Survey. Let's drop that in over there. Not good. Okay. Contrarian, hard sell. Okay. All right. Investors have poured money into stocks and commodities. Overweight equities, highest overweight equity since 22. That's probably coming off of 2021. Even at the height of previous bubbles, investors did not dare go to these levels of cash. It means positioning is fragile to any bearish developments. Any bad news is going to do a lot more damage. Wow. Talk about bearish. How many puts you got, bro? I mean, they're not wrong though. These, like, if cash levels truly are this low, you know, it's a problem. Cash levels this low is bearish because people have less capacity to buy the dip when they don't have cash, and they're less resilient to downside, suggesting selling could be necessary to raise cash again, right? So not great. You know, I mean, so far we're pretty grateful. I think we're killing it right now. We're halfway through the month, and House Hack has raised over $1.3 million. You know, we raised, what was it, 881 in September, 1.4 in October, 1.7 in November, approximately. These are roughly rounding here. And we're already 1.3 in December. And the inflows, I mean, just in the last, 4 days or whatever, we had over 7 figures. So I don't even think all of it has shown up yet in the bank account. It's actually really impressive. So I don't know if people are selling stocks to invest or where the money's coming from, but at least when I look at our data, it seems like, people, I look at sales too, and and I have to say, and I'm saying this not as like a pitch, this is really just like data here. I have not really seen a slowdown in sales for Reinvest AI or the Meet Kevin membership. Like if I look at the last purchases here, I got Reinvest AI, Reinvest AI, Reinvest AI, Reinvest AI, Meet Kevin membership, Reinvest AI, Reinvest AI, Meet Kevin membership, Meet Kevin membership, Meet Kevin membership, Reinvest AI, Meet Kevin membership, Reinvest AI. I mean, that sounds to me like 70% Reinvest AI, just over the last like day. And so these are a lot of inflows of people buying our AI product and the courses, the Meet Kevin membership. And so like I'm not in our group seeing some crazy like financial strain. People have money here. Hopefully people are heeding the warnings of like, don't go deep into debt, don't go into margin. I tell people because they're like, Kevin, you're saying I can invest into house stock with a credit card? I'm like, yeah, not Amex, but make sure you pay it off if you're gonna do that. Like I get it, people want their reward points, but don't go into debt to make an investment. Anyway, U.S. stocks are trading close to record levels, have bounced from their April slump. Yeah, we've done great since April. However, the rally has shown signs of wavering. Despite these fears creeping back into the market, the surveys show that managers are the most bullish since mid-2021. Yikes. Investors are clearly more positive into 2026 and positioning has moved higher. Bank of America measure of optimism exceeds the height of the Trump trade at the end of 2024. Wow. Let's write that down. So investors are more bullish than the Trump trade at end of 2024. That's huge. Let's see here. Most bullish since mid-21. Most bullish since mid-2021. Somebody here says, super happy with the membership. Oh, thank you for saying that, Lisa. To take a survey to see where people's money is coming from. Yeah, I mean, we could do that. Here, I'll run a poll really quick. Start a poll. What we'll do is we'll just ask. We'll say, if you did, or if you were thinking about, if you did or would invest in house hacks / reinvest, where would your cash come from? Selling stocks, income, I'll do savings, selling something else. Okay, I'll run the poll right now. That's a good question. I'll run the poll. Okay, so I just turned the poll on. So you'll all be able to, I suppose, respond to that poll. Okay, so expectations for global corporate profits are at the highest levels since 2021. That's true. I mean, you have a lot on the wall, on the street. I mean, even Morgan Stanley, we wrote this down. Oh, where was it? We wrote it down. I have this. Let me go to Bear Bull Scale, earnings. Morgan Stanley raised guidance, rose substantially in Q3. Right. So, hence EPS growth is expected to rocket. Remember, Morgan Stanley suggested raise guidance was mentioned significantly more often than any sign of contraction in Q3 earnings calls. So somewhat kind of reiterates this like bullishness amongst not just fund managers, but also CEOs, it seems. Okay, possibility of an AI bubble remain the biggest market risk identified. Yeah, we know. Can global equities do well? Bond deals? Okay, let's see what the comments are here. Everything is going up as a percentage. Cash falls, even if you have the same levels of cash. Yeah, but isn't that exactly the point of the article? Cash as a percentage is lower than the rest of the portfolio as it's pumped, the lower the ratio. Right. Yeah, I mean, that's the point. Like, it's not saying people are making changes. It's saying the stretch of the difference has expanded so far. WTI oil falls below $55 per barrel for the first time since Feb of 21. Wow. Wow. Great sell signal. Thanks for the tip. Okay, let's go to CNBC's and let's go look at oil quickly here. Oh, did the Qs just go green? Oh, let's go. We're going green.
Gain the lead.
Barely. A little bit of a rebound there, right off 607, huh? Okay, so oil. Yeah, look at oil. I've got Brent at 59 and WTI at 55. Wow, that's crazy. Gold's up again, 43.5. Bonds are not really going anywhere. 210 spreads at 67, mostly unchanged. Wow. All right, so U.S. stocks mixed. Okay. Fed liquidity tool gets rebrand after crisis of confidence. Uh-huh. Jared Kushner is everywhere, from peace deals to big money. Judges are getting fired as Trump pursues immigration purge. Yeah. Another AI bombshell over here. Okay, let's take a look at this op-ed on the AI bombshell. Okay, so what is this? So this has, of all the eye-popping numbers published, the most striking didn't appear until after. It detailed 248 billion of lease payment commitments, substantially all related to data centers. Yeah, that's where we're talking about, like, how are they going to raise the debt for this? It can make investors even more skittish about their infrastructure plans. Right. I mean, we covered this yesterday. So I don't think any of this is surprising, unless there's something unique here. Future lease commitments are between 15 and 19 years. Lease payments. If all goes to plan, it should be okay because of the sales that they'll make. Right. Well, it's all predicated on, like, are we actually going to keep getting revenues from those data centers? That's what it's all predicated on. Hey, Bitcoin's almost back to 88. Q's really struggling right there. All right, let's end that that poll. Okay, so the answer is 31% of you we ran this poll. Of those of you who voted, 31% of you said that you raise money to invest in House Hack by selling stocks. 30% of you get the money from savings, 25% from income, and 14% from something else. All right. Interesting note. Okay, let's now see. Let's see, liquidity tool. What is this? Oh, the Fed. Fed was forced to quickly pivot from its shrinking balance sheet to address liquidity last week. Yeah, just like in 2007. Because of inefficiencies in funding, part of the efforts to regain control of money markets, removed operational limits on the standing repo facility, crisis of confidence, binding constraints. Yeah, we saw Tomo hit. Did you see Tomo hit? Let's write that down. Let's go. So let's mark this. Oh, let's just call this market. And then let's go put some Fed news in here. So Fed, Tomo is back. Fed, Tomo is back. P-O-M-O, Pomo. St. Louis Fred. P-O-M-O, Pomo. T-O-M-O, Tomo. There we go. Tomo comes back again. If you zoom in closely over here, we just did, we just had one yesterday. Let me zoom in a little closer. There, December 15th, 5.2 billies. So not huge, but, you know, Tomo is certainly back and active and suggests that plumbing liquidity is still moving. Fed's injection into overnights supplements the 40 billion of, you know, likely 26 to 52 week bills and 20 billion MBS rollover into bills. So more, you know, money injection, basically. Another, you know, 5.2 billion yesterday night. We've got Tomo, we've got Pomo, and some of us have FOMO. Gosh, that's annoying. All right. Let's go see here. All right, Fed Powell last week explained the drop in reserves was creating distortions, and those distortions came a little quicker than expected. They changed the name to operations, not facility. Oh, that's funny. That is actually really interesting. So a lot of this is like branding based. So the thing with the branding is Fed rebrands, well, actually, we could just make that a green check. Fed rebrands repo facility to repo operations. Now, why would they do that? Facility implies money printing, which they don't want to imply because they don't want to lose control of inflation expectations. So we'll rebrand and make you feel like it's different this time. Oh, okay. Got it. Yeah, it's not QE, boys. Do not call it QE, whatever you do. Fed's actions came even as bank reserves have increased, but money markets have been flashing signals for months that pressures were building up, rampant treasury bills, funding costs rose, blah, blah, blah. Market participants have pushed back against using the facility more, so they rebranded it as a shock absorber. Fine. Whatever. Okay. We got Tomo. We got Pomo. We got FOMO, and some of us have SOMO. Perplexity AI revamps iPad app. What do I care? I don't care. PIMCO, yeah, there's $7 billion for new asset-based financing strategy. Oh, what's PIMCO doing? White House chief calls Musk drug user conspiracy theorist. Calls Musk drug user VP conspiracy theorist. Avowed ketamine user. Oh, man. I mean, that doesn't really surprise us, does it? Okay. So... Citadel leaves tower as city faces job killer tax. Well, that's what happens. When you tax businesses, at some point they get frustrated and they leave. Okay, cool. So, what is this $7 billion deal? So, PIMCO raised more than $7 billion for an asset-based finance strategy. Sounds safe. Okay. We have insurance companies and wealthy individuals backed by hard and financial assets across residential and consumer markets. Okay. An evergreen vehicle for wealthy individuals that expect to exceed $500 million, as well as a dedicated fund for insurance capital, blah, 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 whatever. More rich people funds. Got it. Okay. All right. What do we have here? Elon Musk, the chief executive of Tesla, was an avowed ketamine user. White House Chief of Staff Susie Wiles tells Vanity Fair. I mean, I am inclined to believe this entirely. Wow. Apple plans to expand its iPhone lineup to 7 models by the fall of 2027 from 5. Oh. Okay. Okay. She also labeled the Vice President, J.D. Vance, a conspiracy theorist. Okay. She's got a lot of critical stuff to say here, huh? And Russ Vought, a right-wing absolute zealot, and criticized Pam Bondi's handling about Epstein. Wow, she just hosed everybody. She quickly looked to downplay those remarks. Significant context was disregarded. Disingenuously framed hit piece. Elon's attitude is you have to get it done fast. And so with that attitude, you're going to break some China. By no rationale could think the U.S. aid process was a good one. Nobody. Oh, like the shutdown of USAID. Initially aghast and confronted Musk when he shuttered programs that Trump wanted spared. Musk had a public falling out with the president, but he's been back at the White House. Yeah, this was embarrassing. Right, the Epstein client list was sitting on my desk. But then there actually is no desk. She gave a binder of nothingness. Yeah, I mean, Wiles said, no way, Wiles says this, no way. Oh, Wiles is like, she went off. This is juicy. and then said that the witness list or client list was on her desk. There is no client list, and it sure as hell wasn't on her desk. White House Chief of Staff. And I like how they used like the largest like 2-inch binder ring that they could find at Home Depot or Office Depot to imply there's a lot in it. But like you could tell it's, well, I mean, I guess they tried to shove some paper in there. So you get some paper falling out of it. Oh, it looks like they tried to shove some paper in there. All right. White House Chief of Staff said she read the Epstein file, adding that Trump was in the file. And that we know he's not in the file. And he's not in the file doing anything awful. She added. Okay. What is this? Wiles was asked about the transition from Trump critics like Marco Rubio had undergone. Marco was not the sort of person that would violate his principle. He just won't. And so he had to get there, she said of Rubio. Okay. To transition to supporting Trump. Score settling. Wiles' interview conceded that cases brought by the DOJ against Letitia James and Comey were political retribution, cast as score settling, saying she asked the president to limit his planned retaliation for the first 3 months of his term. We have a loose agreement that score settling will end before the first 90 days are over. A governing principle for him is, I don't want what happened to me to happen to somebody else. And so people have done bad things, need to get out of government. In some cases, that may look like retribution. Who would blame him? Not me. Wiles spoke bluntly about the chaotic rollout of Trump's reciprocal tariffs. So much thinking out loud is what I would call it, acknowledging there's a huge disagreement amongst advisors about whether the tariffs were a good idea. She called the process more painful than I expected. Wow. That's very entertaining. I guess this is the whole story here. Okay, yeah, here we go. He is a complete solo actor, she said of Elon Musk. Something akin to a jacked up Nosferatu. The hell is that? Like an archaic Roman word for a vampire. An offensive vampire. Okay. Jeez, man. What are we reading? Yeah, these are all quotes, by the way, from Susie Wiles right here. She's like the right-hand woman to Donald Trump. So she's pretty powerful, honestly. Wiles said Trump's billionaire who led the scorched earth blitz known as the Department of Government Efficiency. Wiles describes Musk as something akin to a jacked up vampire, basically. The challenge with Elon is keeping up with him. He's an avowed ketamine user and he sleeps in a sleeping bag in the executive office building in the daytime. And he's an odd duck. I think geniuses are. You know, it's not helpful, but he is his own person. Okay. I believe that USAID did very good work, and Musk basically shuttered it. We're doing this. He was already into it, and it's probably because he knew it would be horrifying to others. Fire everybody, shut them out, and go rebuild. Not the way I would do it. Wiles knew that fixing this was on her. She called Musk on the carpet. You can't just lock people out of their offices. I don't know a lot about the extent of their grant making. But with immunizations halted in Africa, lives would be lost. She was soon getting frantic calls from the heads of agencies. Thousands of lives were in the balance. So Marco was on his way to Panama. Can we call him and say, your Senate confirmed? You're going to have to be the custodian, essentially, of USAID. Okay, he said. But Musk forged ahead. All throttle, no brake. Elon's attitude is you have to get it done fast. If you're an incrementalist, you won't get your rocket to the moon. Okay. And so with that attitude, you're going to break some China. Interesting little insights here on Musk. I mean, I don't think any of this surprises anyone at all. Musk. This was the Musk stuff we saw. Oh, what's this microdosing part? Oh, look at this. Okay, Wiles. Hold on, what is this? Most senior White House staff parse their words and speak only on the background. But Wiles has answered almost every question I put to her. We often spoke on Sundays after church. Wiles calls herself Catholic Light. What the hell is Catholic Light? Okay. Trump, she told me, has an alcoholic's personality. But I thought he doesn't drink. Trump has an alcoholic's personality? Is that just sort of like volatile? Is that a way of saying volatile? Vance's conversation said she has been sort of political. The vice president, she added, has been a conspiracy theorist for a decade. Russell Vogt is a right-wing absolutist. When I asked her what she thought about Musk reposting a tweet about public sector workers killing millions under Hitler, she replied, I think that's when he's microdosing. She says she doesn't have firsthand knowledge. Timu Catholic, wow. Wow. Yeah, none of this is a shocker, but it's kind of entertaining that she's like spilling all this tea. The president, it turns out, is a junkie of what? Zeitgeist, president remembers the New York of the 70s. Okay. So, win-loss stats, got it. Trump has an alcoholic's personality. He operates with a view that there's nothing he can't do. Nothing. Okay. But high-functioning alcoholics or alcohols in general, their personalities are exaggerated when they drink. And so I'm a little bit of an expert in big personalities. Interesting. Okay. I judge people by their genes. Wow. Well, this is entertaining. Okay. For all the chaos in the cabinet. And then, of course, we had the Musk pieces here. Wow. And then the Liberation Day was chaos. We talked about that. That's very interesting. Bigly interesting. Okay, what's going on over here on the Qs? Man, the Qs just can't keep it up today, huh? Really struggling a wee bit there to keep it up. All right, let's go see what else. Well, that's interesting. Nick. What November's jobs report means for the Fed. I don't think much. You know, what's interesting is we should probably talk a little bit about Tesla. Let's put some notes together on Tesla. So, Tesla. Okay. So, we know there's a bear piece that was circulating around Tesla. Let me see if I can grab it really quickly. And it's probably worth addressing the bear piece. This one here. It's, you know, not my favorite source, but we're going to address some of these things piece by piece. And then let's also go grab... why don't we go in and grab the last Tesla earnings. So Tesla earnings call. Here we go. Here's their 10Q. And then let's pop this puppy open. Okay, here we go. So from Tesla's last piece here, this is their actual 10Q. It's probably worth looking at their gross profit. So if I go and slap in just GP over here on each of these, we can see 3878 divided by 15,787. We're about 24.5% gross profit. So am I doing this math wrong? Because because I'm not coming off total revs. Hold on. So 3878 divided by 16,661. No, that's 23.2%. So what is the 72? This must be margin over here. I don't know what this is. Or I'm grabbing that from a different number. Oh, this might be vehicle margin. I think that's vehicle margin. Gross profit on cars. Yeah. This is vehicle margin. Gross profit. That's specifically vehicle margin. So you can see vehicle margin is obviously lower than their total GP. Now their gross profit last year was 4578 divided by 18,530, 24.7. That's for last year here. And then if I do these two numbers, let's see what we get. 7031 divided by 3628, 22.9. Make sure I'm doing the math right. 22.95. Make sure I'm also dividing by the right number at the top. It should be the 19,878 number. 23. Yeah, if we go off the whole line, I want to grab off this line here. So let's update to that line. And if I go 3878 divided by 16,661, 23.2. 23.2. And then here we're going to go 8,274 divided by 37,256 is 22.2. So gross profit overall has been rising. GP overall rising. That's good. Good PP. The problem is the automotive side is what's been shrinking, especially since these regulatory credits are going to go away, right? So if these regulatory credits go away, we're at 14% gross profit on car sales, right? Is that right? Let's see. 13,567 divided by 15,787. Yeah, I'm at 14%. So 14% ex credits versus last year 962 divided by 18,530. We were about the same, 13.9% last year. So roughly stable there at about 14% margins for Tesla. Now, if I go to net income, I did like this little note I had here. It's worth noting. NVIDIA has 10x the net income margin and twice the revenue, yet Tesla is 1/4 of the price market cap. Okay, so let's update this to what it is today, because the numbers have obviously changed a little bit. So net income for Tesla, their net income margin, 1190 divided by 22,496, we're sitting at about 5.7%. 5.229%. And NVIDIA is at about 55%. So that's actually still correct. Okay, about 55%. So NVIDIA's margins are about correct. NVIDIA's revenues are probably more than double right now. Let me go see. If I go, let's just go cheat. Rather than getting the filing, I can cheat by going to, not markets, NVIDIA. balance sheet, revenues in the quarter, 57 billion. I mean, we've got almost 3 times the revenue. And almost 3x the revenue now. Now, Tesla, price-wise, is trading for, let's see, NVIDIA's at a 4.2 and Tesla's at about 1.6. So, $4.2 trillion market cap NVIDIA, 1.58-ish for Tesla, which means 4.2 divided by 1.58. Tesla's trading for, let's see here, 1.58 divided by 4.2, 37% of NVIDIA, okay, right? Yet has 1/10 the net income margin of NVIDIA and roughly 1/3 the sales. So like, you know, it aligns on a sales basis, but not on a margin basis at all. NVIDIA just smokes in terms of the actual margin comparison. But in fairness, you're comparing a designer in this case. And it's just because we're looking at trillion-dollar companies, right? In fairness, Tesla is a manufacturer and NVIDIA is a designer. Hence why we want to use smaller multiples for Tesla, right? So now let's compare to another trillion-dollar company. Let's compare to like Google, for example. So if I go to Google Investor Relations, how do we see the company's pegs again? I mean, just calculate it. I'll do it. I mean, you could go into the Meet Kevin app as well. That's an easy one. So I'll grab it really quick. So if I go to the Meet Kevin app, the Tesla peg, let's do Tesla, Google, NVIDIA, right? So Tesla peg is 6.78. NVIDIA peg is, NVIDIA in the course member app is sitting at 156. And then Google's at 225. Okay, 156. And then Goog peg is 225. So, you know, this suggests like a manufacturer should be at 1.67 and service company at 2.67-ish, somewhere around there is usually what we like, which suggests that NVIDIA is cheap right now. This suggests NVIDIA could be trading for 71% higher, 71% upside. Google would have an upside of 18.6% upside, and Tesla as a manufacturer has a downside of 75.4%. And then as a manufacturer, they have a downside of 60% as servicer. So either way you slice it, the valuation is cooked up right now on Tesla. And a lot of that is driven by momentum. And not fundamental momentum. It's just price action momentum, right? Part of it is like the Elon pump is strong, right? That's really what's going on right now with the valuation. I mean, think about what he's doing, suggesting Tesla shareholders could get IPO access to SpaceX, that's a pump, right? The Cybertruck, likely internal and trailing car on the no driver robotaxi spotting you know, not rigged at all, is a pump, right? Like a lot of those things are kind of pumpy, but that's fine. So as long as we fundamentally know about it, I think it's useful. So let's see here. Yeah, you could get anything for eHack in the Meet Kevin app. We've moved it all over to the Meet Kevin app, and then we'll have a desktop app soon. Well, maybe not soon, but next year. Okay, so then revs. Let's see what we have over here. Revenues. Okay, so net income at Google is 23.6 divided by 80.5. Net income at Google is about, 55% NVIDIA and then 29% at Google, just for comparison purposes on the net. And then obviously the free cash flow drivers are at Google. Free cash flow we're creating at Google is about, this is in a 3-month period, about 16.8 billion of free cash flow. Let's go look at Tesla's. So just for comparison, because these are other trillion-dollar companies, right? 18 bill in 3 months at Google free cash flow. NVIDIA's free cash flow, NVIDIA investor relations, is 10Q. Okay, we have cash flows. Holy smokes, man. Plant, property, and equipment 5, 61 and 9. So 61 divided by 3 puts us at about 20.3 in 3 months, right? So then I've got NVIDIA, 21.3 billion in 3 months of free cash flow. Okay. And then at Tesla, free cash flow is cash flow from operations, 4.6, plant, property, and equipment. It's about 800 bill. 800 mil in 3 months, 6 months. Oh my gosh, $400 million in 3 months, right? And so the reason, again, we're comparing to these other companies is because when we're comparing to NVIDIA is a $4.8 trillion company. Google is a, $3.7 trillion company. Like, these are, what's Apple these days? Apple, which also manufactures, is a $4 trillion company. What's Apple's free cash flow? Let's go find out. Apple investor relations. So Apple, SEC filings, I got a 10K on them. Okay, that's just gonna mean a little bit more scrolling. So 10K on Apple is gonna put me at, I've got operating activities for the year ended 111 minus plant, property, equipment of 12.7, 111.5 minus 12.7 equals divided by 4, 24.7. Okay. Apple is 24.7 billion in 3 months of free cash flow, right? So when you're looking at, other Mag 7 components, Tesla really has massive, there's a massive cash flow lag at Tesla. Massive cash flow lag at Tesla. It really suggests its valuation. I mean, this should be obvious, but I don't think it is for people. The valuation is not driven by cash flows. It's not driven by margins. It's barely driven by pricing power. FSD is very sexy, mind you. But it only converts 12% of users, which is shockingly low. Like, it should be way higher. That's kind of why I think it should just be like 100% and just give it to everybody almost, but whatever. Because I think that'll increase overall car sales more than not. But anyway, and your net income would be greater, but that's my opinion. So, this means we're really driven, this valuation, the valuation is driven by, Elon, Robotaxi pump, right? The spottings, and, the map expansion. So we'll call it map expansion. We'll go put this somewhere over here. And I put spottings in quotes because I think they're like, hey guys, we're gonna do this on this street at this time, and then somebody gets the candid picture. It's not candid at all, right? So Kevin, do you think a rotation to healthcare is possible tomorrow? What do I know about tomorrow? What's tomorrow? Like everybody who watches this channel should know I don't do healthcare stocks. Like I like AI plays that could benefit healthcare because I think AI is huge for healthcare. I think what Palantir or like a UiPath or Salesforce or whatever, what some of these could do for healthcare, I think is huge. But I don't do healthcare stocks. You're asking the wrong person. So thanks for the $5 though. The valuation is driven by a Robotaxi pump, and then also you've got the Optimus pump. We are not driven by this. This is not about new models. This is not about cash flow. This is not about margins. This is about hope for a better future. That's really what this is. This is out of all of the Mag 7s, this is at this point it's become a hope play. And that's fine. Like I love the idea of a Robotaxi and Optimus. Robotaxi and Optimus are really startups. So this is becoming a $1 trillion startup with a $500 million car business. $500 million car business. That's kind of what you've got. $1 trillion startup with $500 million car business. And I think the rationale here is it feels safe because it's a Mag 7, right? Feels like a safe startup because of Elon and Mag 7. Elon's reputation and historical success and Mag 7, right? So Mag 7 status, the crown of his historical achievements and reputations, that's really what's happening here. And it's publicly available, right? So most startups are a pain to invest in. Like there's no swipe up for a startup. I wish there was. There's no easy swipe up to invest. It's paperwork, it's set up payments, wire money or whatever. I get it. We're raising a ton of money right now as we're closing our fundraise for House Hack, and it's nowhere near as easy as swiping up. I think obviously there's a lot of risk in certain companies that you can swipe up on versus, the low valuation that we're raising money at right now. And that's why we want to close this fundraise too, because we think we're raising way too low. We're raising at our August 2024, the low end of our August 2024 broker-dealer valuation. We think it's a steal. So we're closing that fundraise December 31st. But anyway, this gives us a little bit on their 10Q. We know the credits are going away. Unfortunately, the credits are going to hit their cash. So the removal of tax credits on a quarterly basis of $439 million, those are presumably cash. We don't see them removed here as non-cash. So they do show up as cash. Deferred income taxes, yeah. Okay, so subtracting 400 mil per quarter of tax credits means we're probably cash flow break even at Tesla, right? So that's somewhat interesting. So he says, but look at how oversold healthcare is. Yeah, well, oversold is one metric, right? It's not everything. Like you can't. I don't go look at a business and say, it's Oh, sorry, billion car business, right? I don't go look at a stock and go, oh, it's oversold, therefore it's a buy. You know, sometimes there's a reason a stock is oversold. Like, I don't like the fundamentals of some of the healthcare plays. We've done some analysis on them. I'm not very good, I don't think, at doing the healthcare analyses, but I have done them in the past, and so I hope, you know, hopefully it gives some guidance. But so, you know, then we look at over here, I've got bills to pay right now at Tesla of deferred revs, 27, call it. I've got $27 billion of bills to pay. And then I've got inventory, absent inventory, I've got 21.2 plus 15.6, rounding up in their favor. And then accounts receivable, I'll give them a full 4. I got about $40.8 billion in cash and accounts receivable. Minus $27 billion means I have about $13.8 billion in free cash. So I have $13.8 billion in free cash. That's pretty damn good. You know, $13.8 billion, that's nice. That's actually pretty decent. So, yeah, how much of these are U.S., you know, how much are U.S. Versus international? I'd argue most. But, you know, maybe they say regulatory. Regulatory credits, here we go. Blah, 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 blah. Recent repeals contributing to $1.1 billion decrease in our remaining. May impact, blah, 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 blah. Regulatory credits. Crypto assets, right? They're gonna take a hit on the digital assets. We've got new adjustments from crypto adoption, crypto as adjusted, 700. How much Bitcoin do they have? Let me see, because I think I have that written down on another spreadsheet. Let's see, that's my bear bull spreadsheet. Bitcoin, loss to gap, Tesla. Where's Tesla? I've got yeah, I've got about $322 million of Bitcoin losses at 85,000. Now we're at about 87,000 now, but if you close out the quarter, you're gonna get hit with about $300 million of Bitcoin losses because they have almost $1 billion of Bitcoin. That's a lot. Well, it says here 722 as of, well, but that's as of June 30th. So why is that as of June? Because we should have a new report since then. Okay, so oh yeah, this is since June. Okay, fine. Let me get the more recent one then as well. So if we have at 85K, we're going to face about 322 million of Bitcoin losses at Tesla, unfortunately. We saw what that did at GameStop. You know, that's gonna take about a third out of their EPS. So that's not great. Okay, so let me get their last 10Q. Tesla, investor relations. And then it's actually useful because then we'll be able to see the difference here. I actually kind of like doing that. Okay, so all work researched, Tesla Q3 2025, 10Q. I think that's, like, seeing change over time is really important. Okay, so here is the next one for Tesla. And then in this example, how has our cash changed? So our current bills here are at 12 well, let's just do 31.3 minus 3.7. I got 27.6 in bills. And then I have 18.3 plus 23.3 plus 4.7, and then inventories and prepaids. I got 46.3 billion here. So that's pretty good. you know? Free cash up to, that's great, 46.3 minus 27.6, 18.7 billion. That's up from last time, which is great. Cash flow is on the 9-month basis. I'm pretty sure their free cash flow declined. They're not showing it there, so let me go to the deck. The deck will show me cash flow for the quarter. Free cash flow, for what period of time is that? Operating cash flow, oh, they're saying free cash flow of 4 bills. Oh, let me see here. Because here they're reporting 9-month, although we did have a massive boom in car sales in this quarter. So let's look at it here. Yeah, okay, a lot of that okay, that could be, that's 4 billion of free cash flow in 9 months, much of that in Q3, maybe even all of that in Q3. So absent that Q3 push, you're pretty low on free cash flow. With assuming, you know, if Q3 push stayed, we'd be at, you know, 1.33 billion of free cash flow per quarter. Okay, good comparison here. And how are our margins here? So margins on automotive sales were 17,365 divided by 20,357, about 14.7%. X credits, 14.7% X credits, which was pretty decent. So their numbers actually, like, there was an improvement in some of these numbers in that Q3 rush. Gross profit 54 divided by, well, let me actually just go down to net income. 1389 divided by 28095. I get about a 4.9%. That's actually a decline in the net income margin. So it actually worsened over here. And gross profit got 54 divided by, and that's still with the tax credits, about 17.9% on gross profit. That actually got hit hard. Why did it go down so badly? Wait, did I do the math right on that? 54 divided by 2205, 21. No, I didn't. Okay, let's make sure. There we go. That looks a lot better. Okay, I'm not sure what number I divided there. I'm gonna triple check now, 54, because that seemed way low. That's why usually if you get like a really big, way low number, double check your math. It's easy to make an oopsie doopsies. Okay, good. So let's now go take a peek, because we've got a lot of notes over here. Let's go look at crypto. So crypto still listed here as adjusted, September 30th, 729 is what they show for digital assets. That seems to be a little lower than I remember. But if they have 729 in Bitcoin as of September 30th, we are still going to see an EPS hit here. 729 mil Bitcoin as of Sep 30. And what's Bitcoin done since September 30th? Let's see here. BT Sizzle. Since September 30th, September 30th, we closed at 114. So 87.5 divided by 114. I'm down about 23-ish%. So times 114 down to 87.5K equals a loss of about 23%, or it'll bring us down to about 559. About 170 mil. All right, well, that's not so terrible. It's about 170 mil at 87.5 of a loss. So we're definitely going to get hit by a few things. Like that Jan report. Jan report will be tough. We're going to expect fewer credits, $170 million crypto hit, fewer sales, lower cash flow, and obviously we're not going to see revenues yet from Robotaxi or Optimus, right? So January report will be hard. Now it's possible markets are already anticipating some of that. So where was the bear? So here's a bear The numbers don't lie. The numbers show that a net loss in Q4 is a very real possibility. Here's why I think Tesla's going to be forced to admit to the world that Tesla's already losing money. Man, honestly, I love the Cybertruck. Like, I've got a Cybertruck. It leaks, which I'm really pissed off about. But I really like the Cybertruck. Like, my trunk bed leaks. And, I don't really want to talk about it. All right. So, Tesla's quarterly revenue from its automotive division declined year over year. Well, of course, in Q1 and Q2 of 25. I mean, that's true. It's also the first, so that is a fact. It's also the first time Tesla has posted 2 consecutive quarters of decline since 22. Tesla reported Q3 a boost by the expiration of the vehicle tax credit. Where do we sit with prices, by the way, on these cars? Because I remember they introduced the new Model Y at like $39,900, which I thought was actually a little aggressive. Yeah, it's still $39,900. So they haven't reduced Model Y prices. So $39,900 on cloth seat Model Y has not changed in price during the quarter. And what incentives are they doing right now? Oh, 0% APR. Of course, that's how they're reducing the price. So they did reintroduce 0% APR. So 0% financing. Now, how long do they do the 0% financing? Is that for the lifetime of it? 72-month financing, $3,300 down. I mean, yeah, like 0% interest. The funny thing about that is then you don't get the tax credits, you know? I mean, obviously you'd rather pay lower interest, but you don't get the Made in America tax credits. So kills interest tax credits. So yeah, that's interesting. Okay, so then you've got, okay, let's go see the other complaints that they have here. So the other complaints are EV sales were down, plummeting. Even if Tesla vehicle sales somehow outperformed the industry trend to fall only by 50% year over year, its automotive revenue would plummet to $9.9 billion. Well, let's look at that. So if our automotive revenue, yeah, I don't think we're going to lose a whole $9 billion. But if our automotive revenue dropped, let's just do a quick math here. Let's do a calculator here to see what it would take to go negative. Okay, just for giggles. Okay, so we would have to do automotive sales, because car sales are positive to gross profit, right? So for Tesla to go negative, we need, for Tesla to go negative net income, we need, the net income loss has to be, well, let's start with gross profit. So gross profit current Q3 is 50/54, so $5 billion. So we would need a $5 billion loss or reduction in revenues, gross profit, okay? Well, $5 billion reduction in revenues, gross profit, I don't know, man. That would be automotive sales, 17. I mean, the automotive sales only contributed like $3 billion of gross profit here. That would be all of it. Yeah, I don't see them going negative growth. There's no way. There's no way you could go negative gross profit. You can't go negative gross profit here. Because even if you got rid of all of the automotive sales, you couldn't really go negative gross profit. So I don't know about that. Like the services and energy, they all still prop you up. Now, could you go negative net income? Negative gross profit, impossible on car sales down. So that's good. Now, negative net income, well, I mean, we need to take off $1.3 billion. If we took away half of the car sales, yeah. So we don't even need a spreadsheet for that. So if I took away half of the car sales, then our net and crypto, actually you really only need to then take away about third. Yeah. To go negative net income, if car sales decline from Q3 by about 1/3, we could see negative net income. Now, I wonder what Wall Street is currently forecasting. So Wall Street right now has Tesla earnings. Let's see. Tesla earnings estimates. So earnings estimates are expected. That was Q3. I want Q4. Net income. Is that Q3 or Q4? The next earnings are January 29th. Q4 estimate. Adjusted. Yeah, no, still showing positive. That's a big expectation. You know, Wall Street is still expecting. Wall Street expects a net income of 1.584 billion adjusted. So that's interesting, which would be they're expecting EPS over here to be about, on a GAAP EPS basis, they're expecting 34.5 EPS expected. So a little bit of a decline here, but actually an increase in the net income, adjusted net income. All right, so they're certainly not expecting it to go negative. Interesting to compare to the Wall Street expectations. Okay. Then let's go over here. The company's other business units might pick up some slack. Oh, absolutely. But it still translates 10% decline. Loss per money per car. The $7,500 down. Stripped down models, fine. If all of the Model 3s and Ys that Tesla sells moving forward with the new standard versions, the $5,000 price difference would take off about $1 billion of revenue. Well, yeah, and keep in mind, you also, it's losing those tax credits. It's the crypto and the tax credits. Okay. Sec. Okay. Cool. In addition, we've seen margin compression, blah, 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 higher expenses, SG&A, R&D, robotics, automation, EV sales, blah, 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 blah. Okay, interesting. Yeah, I mean, so that's just, you know, some argument here. I don't know if it's going to be that bad. It's possible. I would say, you know, probably not that bad, because I don't think car sales are going to plummet by 1/3, but, you know, they'll certainly decline. You know, like a 20% decline in automotive sales down to 16 bill doesn't seem unreasonable, though the 0% APR helps, you know, sort of prop that out up. Okay, cool. That's good. Then, what else do we have here? Oh, people are investing. Just taking a quick peek here. Everything looks good. Yep. Yeah, a lot of new investors for House Hack. Okay, cool. All right, so continuing then on the analysis front, it's, you know, it's probably going to be the toughest quarter for Tesla. I'd argue hardest quarter, sort of adjusting to a new normal. Now, if they went cash flow negative, okay, so that would be interesting, because if free cash flow now declined on a quarterly basis, okay, so free cash flow outside of Q3 is just 400 mil a quarter. If car sales decline 20%, free cash flow, let's see, that would be about $4 billion, and we're at about a 14% X credit margin. That'd be about a $5.6 billion, that'd be about 560 mil. We'd be negative. So you really don't even need that much. You need, yeah, okay. Well, if car sales decline 20%, free cash flow will go negative, or should. So, free cash flow going negative wouldn't be a surprise for the next year, especially as they ramp other production lines. And so that, that 18.7 billion in free cash they have will help them get through, frankly, even if you said they were negative $1 billion of free cash flow per quarter, they could get through 18 quarters. So call it $2 billion negative free cash flow per quarter, high loss estimate here. We'd be looking at over 2 years of cash available for this burn. So I think you're okay. It's not like there's a bankruptcy risk here, right? So, okay, cool. Good. All right. Let's see. What else have we now? And we'll summarize that and look at what else for a moment. I'm gonna get some coffee too. So, let's see. FTs. Not really anything on the FTs today. We've got The Economist. America gives Ukraine reason to hope. Okay. Let's see here. What's the journal got for us? Netflix, no, let's see, unemployment, GOP's healthcare, new college unemployment line. CoreWeave, yeah, CoreWeave's gotten beat, man. All right, let's go take a look at the sticks. So I've got Bitcoin at 87.5. I've got the Qs basically flat today. It's been very, very sluggish, slow. I did expect we would go green. In the alpha report this morning, we were down here, when we published our alpha report. So we were down at like 608. And I'm like, the things that I said this morning in the alpha report, I don't expect a big red candlestick at the open. I actually think we'll get a green candlestick at the open. Well, I said that because the jobs data just wasn't that bad, that it would lead to institutional selling, was my opinion. That's what happened. And then I thought we'd have like a slow, really, I didn't think anything rapid would happen today, like a slow slog up. We've slow slogged up from where I'm holding the line here, but it's been volatile. Look at that volatility. We had to wait for a 607 bailout. How crazy, huh? All right, let's listen to what they've got over here. Remember, you could join that, get lifetime access to those alpha reports every morning at meetkevin.com. Use that coupon code Santa Reinvest.
It didn't coincide with a major scandal or an industry meltdown. It's underperforming the S&P 500, the NASDAQ composite, and yes, even gold for the year. Also, let's check in on shares of Strategy. It snapped up nearly $1 billion of Bitcoin just in the last week. Higher today, but over the last 6 days, down about 10%. Strategy will remain in the NASDAQ 100 index after its annual reconstitution. We did learn about this just a few days ago, Scarlett.
Yeah, but there are still questions about whether that will remain the case. Now, a check on the latest crypto treasury firm to go public. We're looking at 21 Capital SPAC that was completed last week and now trading under the ticker XXI. The shares plunging 20% on their debut. And though they did mount a bit of a comeback, it's still below the SPAC's last closing price before the official combination. 21 has almost $4 billion worth of Bitcoin on its balance sheet and says it plans to work on financial infrastructure for the digital coin. Tim?
Well, last week we discussed crypto treasuries with one of the pioneers in the space, David Bailey.
The part of the treasury company strategy that we haven't really seen play out yet is how are firms like KindlyMD going to monetize their Bitcoin? So, we've seen just a few in the past couple of days, major treasury companies get approved at the SEC, start trading. I think today 21 started to trade. And so the question is really, what are they going to do with their Bitcoin to make money?
Well, joining us now to answer that question is Jack Mallers, the CEO of 21 Capital. Jack, good to have you on the program. What are you going to do with that Bitcoin to make money?
Well, as a business, we're going to build products and services that have customers and high margins and growth and cash flow. So I've been very vocal. I don't think of 21 as a treasury company. We're a Bitcoin company. And it's such a simple term that it might go in one ear and out the other. But if you think about it, there are no Bitcoin companies. The spectrum as we see it is on one side, you have these treasury businesses, which aren't just focused on products and cash flow and high margins and growth. They're focused on financial or a Robinhood or even a Polymarket and a DraftKings that are monetizing speculation. And these businesses are all arriving in the same place. They're going to have prediction markets, they're going to have crypto, they're going to have equities, they're going to have gambling and sports betting. And we want to live somewhere in the middle of that intersection. We think a huge opportunity, and probably the biggest opportunity, is being a Bitcoin business and financial services. So we're looking at markets like credit and lending within the space to have both an operating cash flow aspect of our company. And then also we're already the third largest treasury in the world. And we think we're going to be able to add to that substantially.
Okay, so credit and lending. What else, though? Would you ever go toward the Robinhood side of things and do more with prediction markets, with trading?
Yes, I would say we're categorically different in that we aren't optimizing for the world of hyper financialization and hyper speculation. That's just not a world that I want to necessarily live in. I don't want a prediction market on what I'm going to eat for dinner tonight. What we think is a bright future for society and for the world is one that is capitalized and built on top of Bitcoin. And so if you think about the co-founders of this business, which is Tether and myself, and a minority but significant holder in SoftBank, look at our history and you can see in what we're focused in. Trading and exchange, credit and lending. Tether's the biggest stablecoin business in the world. We already have one of the biggest treasuries in the world. And so there's a huge opportunity, we believe, in focusing specifically on Bitcoin financial services, because despite it being probably the biggest innovation of our time, no one seems to be building a business specifically focused on top of it. And that is why we exist and why we're different in the capital markets.
We're different.
So some of the things that you were saying you're planning are certainly exciting, credit and lending. I guess my question is, why didn't you launch with a lending component right from the beginning? That would help separate you.
What is this trash? This is 21 what? Sam Bankman Fried 2.0 says someone in the chat? Probably. 20, what is that? That's 21 Capital, right? 21 Capital, listed, institutionally backed Bitcoin native company. Ambition to become the largest publicly trader of Bitcoin, but a traded company holder of Bitcoin. Sounds like a scam. XXI stock. Oh, wow, look at that performance. $50 to $10. Holy, just what? Down 78% from the peak. Wow. Sound? What's wrong with the sound? What happened to the sound? Can't hear me? There, I adjusted. That's weird. Shouldn't have cut out. But anyway, so what is this? 21 Capital Inc. Investor relations. So business combination. So was it a SPAC? Maybe. Quarterly, no quarterly data. So we'll probably just have registration data here. S4. Okay. Let's do a look at this. 21 Capital XXI 1216. Let's see what this garbage is. Open. All right. Lauren made some cookies, so I had some cookies. And got myself some coffee. Okay. So, what is this? Let's go find out. First of all, let's go see, do we have any numbers here? Presumably not. It's probably just a big scam. But people buy this stuff. I can't find their financials. It's actually what makes me so excited about what we're doing, because we think we're just slow and steady. We're gonna, the fact that we're doing the real estate AI, it could be much more than slow and steady. But I like building businesses on conservatism, just really nice, consistent, slow. You could be here for 50 years. You're not gonna boom and bust like a lot of these companies. And it's just a different mindset, I guess. All right, so what do we have here? Cash. We've got, are these in, is that it? $25,000 in cash? $295,000 in this? Loss from operations? Okay, yeah, here we go. What do they even do? They don't even make money, dude. They literally have a combined balance sheet and income statement here. Loss from operations, $632,000. Interest income on investments held in an account, $1.1 million. So they raised a bunch of money, shoved it into an account to earn interest. They don't even make money. What is this company supposed to do? This just seems like another scam. Oh, okay, yeah, here we go. What is this? Cantor Equity Partners. So this is the, Lutnick family Fs. Not shysters at all. Okay. You're cordially invited to attend the extraordinary general meeting of shareholders at Cantor Equity Partners, a Cayman Island exempt company. Right. Yeah, we're off to a great start over here. 21 Capital is going to be a Texas corporation. It's a merger of a British Virgin Island company called Bitfinex together with Tether. Tether? What Tether? Tether Investments? Tether Investment. Is that a knockoff off of the actual Tether? Tether Investments. Tether is owned by iFinix Inc. Okay, so how does this relate to this company? Yeah, it is. Okay, so Tether is the largest cryptocurrency trading, blah, 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 blah. Company based in the British Virgin Islands, which operates the Bitfinex currency exchange. Okay. All right. So this is a merger. 21 assets. I don't understand. Together, sellers. The sellers. So the Tether people are selling this off? See, because Tether is considered a seller. 21 Capital, wholly owned subsidiary. Man, this is confusing. Business cost. So what's supposed to survive? Like, what's going to be left at the end? Like, what are people actually getting here? Because this is just trash so far. I mean, from what I can tell, this is so complicated. All their sponsor payouts, all their scamming. Okay, where is the business combination proposal? To approve and adopt the combination of 21 Capital and 21 Merger Sub Okay. El Salvador Company. What is all this stuff? Solely for limited purpose. I can't even read this. I don't even know what the hell is going on here. I have absolutely no idea what this company does. They make no money. It sounds like a liquidity ploy. Financial statements. Can we actually see, like, do they actually have a description of their business? Oh, Lord. I don't think they do. These are all meeting notes here. All right. I have no idea. I'm about to give up on this. Let me see if there's a table of contents for business, what they actually do. No table of contents, really? Of course not. Oh, there we go. Wait, they don't want you to read this. So what is this actually going to end up being? We don't even know. Well, what do they say they are on their website? 2021 Capital. Well, this is their website. This is it. The XXI Standard, a model built on Bitcoin's fixed supply. 21 lays the groundwork for future financial infrastructure built on Bitcoin. That's it? There's no business. This is a scam, dude. This is it. A Bitcoin native company through business combination. Backed by Tether and SoftBank. Right. Because they're dumping some of they're like, it's a liquidity play for some of the owners at 21. Intends to develop a corporate architecture capable of supporting financial products built on Bitcoin. It's a concept of a plan. That's what it is. It's a concept of a plan. All right, we got it. It's about as thoroughly thought out as Donald Trump's healthcare plan. Ooh.
Corruption is not bad. Corruption is only bad if I'm not involved.
Poopy doopy.
Golly, man. I don't know. I don't know how people put money in this stuff. I mean, I guess they don't. I mean, look at the chart. Jeez, man. Okay. All right. We looked at the unemployment rate. We looked at that. Let's see what else the doomers have for us. Okay, so then we have right here. Oh, yeah, what's going on with bonds? The 10 years at 6.7. And then, well, the 10-2 spread. Although 10 years falling. No sound in the meme? Wait, you didn't hear the meme? What's going on with the audio? Hold on. Do I go silent again here? Can you hear this part? The ABC part. Call it the ABC part. I'll go back over here. It's weird. All of a sudden just part of our audio died there, huh? But whatever. Okay. So, all right, what else? So what's this all at once EV thing? Because this sort of relates. Yeah, you heard it? Okay. What did I say then? Okay. It was a YouTube problem? Oh, okay. Well, then I'll go back to that. All right, so where was that EV cooling then all at once piece? That's the Susie Wiles. Oh, yeah, here. All right, what do we got here? Okay. So let's see what's going on with this electric vehicle crap. Okay. Shout out to you joining the Reinvest AI. I see some more of you just joined Reinvest AI. Okay, what do we have here? The electric car transition unravels slowly, then all at once. The global transition to electric vehicles is beginning to unravel slowly, then all at once. This week brought a cascade of signals that the EV era is entering into a more certain contested phase. The European Commission backed away from what had been the world's most aggressive timeline for phasing out ICE vehicles, granting manufacturers and consumers more time to move off gasoline. A day earlier, Ford Motor Co. announced a retreat from the electric strategy that it wanted to go all in on 8 years ago. The pullback is no longer confined to a few laggards or skeptics. The signs of a reckoning have been mounting for months. Take Tesla. The U.S. company that did more than any other in the world to kickstart EVs, the Elon Musk-led manufacturer was never going to keep up the meteoric rise pulled off at the beginning of the decade, but it's no longer just slowing down. Worldwide deliveries are poised to drop for a second year in a row, and Musk's interests have wandered from pursuing a 25,000 electric car to developing humanoid robots and driverless taxis. China's BYD will become the #1 purveyor of battery electrics in 2025, though it too is now having growing pains, with total sales falling each of the last 3 months. Company is still producing one plug-in hybrid with a gas engine. GM recently incurred $1.6 billion in charges tied to pairing EV production capacity and flagged more of such moves. Stellantis scrapped plans. Blah, 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 blah. Bloody, 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 bloody. All right. Okay, well, that's kind of boring. All right. So, zero. Somebody's asking me about the... Oh, Tom, you're asking about the Tesla Powerwall? Well, I think these Powerwalls and stuff are great, but they're very expensive. You know, you're almost better off, if you have the room and the utility hookup, I would rather have a natural gas Generac than a battery for backup purposes, if that was my intention. But if I wanted to, you know, maybe invest in buttering out my grid load, batteries are great, but usually only at lower interest rates. So, ahead of today's jobs report, Goldman, anywhere near consensus, too cold, blah, blah, blah. Well, this is old news. What government data? This is just their analysis of this. We've already looked at this. This is nothing exciting here. All right. Taking a closer look, healthcare construction, following losses, bloody, bloody, bloody. That's the dispersion. Highest on record while full-time workers plummeted. Yeah, that's true. That's true. The part-time numbers were a really big move up on the part-time numbers. Okay. I'm going to get another cookie really quick. I'll be right back, and we're going to summarize Tesla.
There, and I think people are a bit skeptical at the moment. However, though, underlying tech, I don't see it stopping, right? I mean, just to move from JP Morgan to move and do kind of cash bonds and funds 24/7 is just going to tell you this is going to continue to grow.
Maya Vujanovic, FG Nexus Digital Assets CEO. Thanks so much for joining us. Happy holidays. Well, coming up, 5 crypto firms get National Trust bank charters. It's a move that's stirring controversy on Wall Street. That's next.
Yeah.
This is Bloomberg.
Whatever. Kind of interesting because we're kind of seeing like banking shrink, but now these companies want to get into banking too. I mean, well, that's just cool. More choices. I mean, anything to get rid of the big power of like the JP Morgans, I'm all for. All right. So, let's get to work. Cookies and coffee. That's what we're doing today. Man, look at CoreWeave. Still bleeding, huh? Just in the last 2 days. Literally went from 79. You rejected 90. Couldn't hold 79. Now you're at 68. Thomas says, Kevin, you were wrong about Tesla. What? Why are you spamming this? Why don't you have some like balls and like say what was wrong about Tesla? The stock price is going up today. We know that. We're actually almost at all-time highs on it. Yeah, look at that. You're within $6. Crazy. Yeah. Okay, cool. So let's, he doesn't know that's why. Yeah, that's typical.
It's because that's why.
Oh, what? Yeah. Well, why do you think that, Kevin?
It's because that's why.
It's the circular. Yeah, Max, I saw your message, but like we're A, not doing that right now, and B, I wish you the best on your puts. Okay, so Kevin, I'll handle Thomas. Okay, there you go. All right, so let's do a summary on Tesla here. So not only are we going to talk Tesla, well, later I'll talk about Kevin Warsh. I've got a Kevin Warsh video coming out later. Highly encourage you to watch the Kevin Warsh video. Yeah, that'll be really interesting. And then S&P manufacturing wasn't great this morning. 21 Capital, we know that's a scam. Okay, the Vanity Fair piece, we could talk about that, which is really kind of wild. And then let's see here. Cars. We saw the Ford piece. Musk diving into 2026 midterms for the GOP. Oh no, not this crap again, where he gets involved in politics. Please no. We've already been through that kind of Elon. We don't need more of that. Okay, that's a scam. That's a scam. Sell that. Okay. So then the Susie Wiles piece. Yeah, the Susie Wiles stuff is wild. Look at that. Then we've got Tesla's earnings numbers that we looked at. We got those handy. Okay, cool. Somebody says, what do you think about SpaceX? You know, I made a video on it. If you take a look at the Meet Kevin, just type into YouTube, Meet Kevin, Elon Musk's next 10X, or Meet Kevin, SpaceX. It'll come up. Oh, yeah, and then we should look at the pictures of the robo-taxi. Because those were interesting too, if you haven't seen those. There are a couple of them. So number one, and then most importantly, we have the at Tesla piece. That is, where is that puppy? Oh, did they delete it? No, they didn't delete it. Oh, there it is. Just saying. Right. This, where you literally see that it's a Cybertruck getting the perfect shot of it. In fact, here you could see the person with has their phone in the back seat. So like, when are you even driving with somebody in the back seat? But here you've perfectly got that shot on that Austin road. Kind of brilliant. It's free PR is really what it is. So let's see here. And then it's posted by, interesting. It's posted by a newer account here with 390 followers, but also followed by Omar. So definitely connected. Interesting. The account's brand new. Brand new, dude. No tweet history at all. The very first tweet they ever post is, oh, I found a leaked, I found this, I just happened to find this on the road. Oh, that's priceless. Wow, great marketing. Yeah. A second look, unsupervised. Well, I mean, there's a car supervising it right behind it, but okay. Why can't I load this? Yeah, okay, well, the other video doesn't load. Yeah, that's interesting. Okay, interesting. Somebody said, you think the original was on Reddit? Reddit, Tesla, Robotaxi, Austin. Let's go track that down. So there's the second. And let's see here, self-driving cars. Let's see, there's a whole like self-driving car thread, I guess. Let's see. Of course, the insiders are, retweeting it, reposting. That's not a surprise. That's the second. Okay, so where is El Firsto? Reddit. I don't actually see that on Reddit. Yeah, because you have to go back quite a while here. No, I don't see that. Okay, and then what's also interesting, if you haven't seen it yet, is the Rivian take. I'm going to pull that really quickly. So, the Rivian take...
So you can sort of think of it like this.
Because they're going LiDAR. Let me see here.
We started this journey as a startup when we consciously chose to build our ECUs in-house. Last year, at Investor Day, we shared an M3 autonomy system. On the screen behind me, you can see the feed from all our sensors on an R2 autonomy system late next year on the R2 vehicle platform. Start with our sensors.
Okay, where's the LiDAR part?
Excessive light and fog.
Oh, there.
Much AI models to operate on. On the screen behind me, you can see the feed from all our sensors on an R2 vehicle. On an R2 platform, much like the R1 before, we have 11 cameras providing a total of 65 megapixels of data. That is 10 megapixels over and above what we had in R1. The cameras provide an extremely rich set of two-dimensional data and help us see the world around us. But cameras alone have some shortcomings. They do not perform well under non-ideal lighting conditions. This could be low light, excessive light, and fog. And so, much like the R1 platform again, we still carry 5 radars. 1 front-facing imaging radar and 4 corner radars.
Right. That's a direct slam, I feel like, on Tesla right there, that part.
That is 10 megapixels over and above. Extremely rich set of two-dimensional data and help us see the world around us. But cameras alone have some shortcomings. They do not perform well under non-ideal lighting conditions. This could be low light, excessive light, and fog. And so, much like the R1 platform again, we still carry 5 radars. 1 front-facing imaging radar and 4 corner radars. By using radio frequencies, radars are able to see in total darkness while also providing the depth and velocity of objects in their path. Our corner radars on R2 are further improved. They support a dual mode of operation, short range and long range. In short range mode, they have very high spatial resolution, which helps us delete the ultrasonic sensors on R2. That's right, we add sensors, but we also delete them when it makes sense. And now, for the first time on R2, we're adding a third sensor, the LiDAR. The LiDAR...
So that's interesting. That's a direct, here's another direct comparison to Tesla.
The LiDAR...
Because Tesla doesn't do LiDAR, obviously.
Thank you. The LiDAR is an optical sensor, but its strength comes from the fact that unlike the camera, the LiDAR has an active light source, enabling it to see it much better in the dark. Another advantage of the LiDAR is that it can provide a three-dimensional view of the world, unlike cameras, which we know provide a two-dimensional view, requiring the AI models to infer the depth, which they do, but with a lot less accuracy.
Right, right.
So in summary...
All right. That's the LiDAR slam. Okay, interesting. I mean, old comparison that just sort of doesn't die, but Rivian's now doubling down on it. Okay, cool. So we've got to talk Kevin Warsh. We'll do that later. That's going to be a big piece. For now, I think we can talk Tesla. We did Dollar General this morning in the course member live stream. We talked about cash management position. We've talked Tesla crypto. Oh yeah, in the 10Q. Okay. Obviously on cash flows and finances. Okay, good. So Tesla, sales expectations. We know where its valuation sits. I don't think that they're going to go negative on EPS, but it does look like free cash flow going negative could happen, but it probably wouldn't be that big of a deal. You do have what's it called? Let me see if I can pull a video of it really quick. Tesla plans battery cell production in Germany from 2027. Are they really interesting? Tesla sees materially expanding robotaxi fleet. See, now you got to kind of pump up before the earnings set. That's funny. It's coming right now. So Morgan Stanley's talking about it right now too. So let's go write that down. Let's see here. I guess it would be useful to look at the latest robotaxi maps too. So Morgan Stanley sees, quote, meaningful, annotate, there we go, sees meaningful increase in robotaxi fleet next year. The same company that just like wrote them down like last week. I mean, I feel like they're like all over the place, and they just flipped on their research channel. Let me see if I can find the Morgan Stanley piece. Morgan Stanley, equity implications. No, I do not see a Tesla piece here, so that must be pretty fresh. Okay, fine. Okay, let's get a robotaxi map. Yes, we've covered SoFi quite a bit in the fundamental analysis tab, Raccoon, thanks for asking. Okay, let's do, Peter Schiff is going on the Tucker Carlson show. That's cool. Okay, let's go to robotaxi map. Oh, that'll be entertaining. Robotaxi progress. Take a look at this. So, Perm replied. Validation tasks. What do we have here? San Francisco. Fleet support specialist adds. Vehicles deployed over 20. No safety monitor. Obviously, that's like the gold standard, is getting rid of the safety monitor. And I think that's where there's a lot of hope coming from that last spotting. Okay, cool. Yeah, SoFi's on a recent downtrend we talked about in the course member fundamental analysis, and you can see the full details of it there. But because they're raising money, that's how they make money, right? They grow their EPS by raising money and then issuing loans. I mean, that should be obvious, but when you go look at the actual details, you'll see a lot more of that. Okay, so let's see here. Do I have that picture? Oh, I wonder, was it on my glasses? Well, it may have been on my glasses. Oh, that's a bummer. I don't think the glasses do geolocation data. It's the one downside of using them. Wait, it was muddy over here. Yeah. What date was that? November 22nd. I think that's when... Because I'd love to see the vid. Nov 22. I remember exactly where I was, too. I just don't remember if it was that date. Oh, yeah, there it is. Okay. Yeah, so... Basically, the back of the car just sort of leaks in, which is really annoying. And I'll show a picture of it. Because they forgot to put a certain seal on the back of the car. And so it just leaks. I'll beam that over. I mean, it's a service issue, but it's just really, it's just a little annoyance. Like, you know, why are we missing that sort of detail? But we'll talk about that. They should make course member live streams mandatory for high school students. Oh, that's awesome. Well, thanks for saying that. What time did he talk about SoFi? What do you have to ask for a time for? Just that's what we have a fundamental analysis tab for, bro. You literally go to the stocks tab, and then you click on SoFi, and then it has the summary of what we talked about in the course member streams. So it actually happens to have the timestamp right there. November 14th, 6:47 a.m. and 30 seconds. It's literally right there in the course member live stream. And then you can go back and use that timestamp and watch the video. It's really simple. You know, surprising. Imagine. Kevin made something simple. What's the coupon code? It's Santa Reinvest, bro. Santa Reinvests. Go to meetkevin.com, you'll see it. Should auto apply, honestly. All right, let's break some of this down. All right. Well, it's that time again to do a full analysis on what the heck is going on with Tesla stock, because we are within $6 of all-time freaking highs on Tesla, and it is coming because of quote-unquote leaked footage of a Tesla driving itself without someone in the car, at least from what we can tell. And this makes a lot of folks pretty dang excited, because if we pull up robotaxi progress charts, the big thing pretty much on any of these charts that we see that circulate, there are a lot of different accounts that track this. You know, here's Jonathan who tracks this. A lot of different accounts that track this robotaxi progress. And what's important to remember is the overarching key out of all of these charts, the thing that everybody cares most about, is not whether there are operator ads or whether there's a test program or whether it's geo-fenced or not or how many cars are deployed. Nobody really cares about any of this. The early applications for taxi service or whatever. What people care all and solely about is this: no safety monitor. Because we Americans and even international folks, we don't want to drive anymore. We want to sit in our car, and if it's a Tesla, you already know the feeling. Elon Musk just made it, so you can now text and drive, and FSD will actually work in the latest update. Kind of incredible. Not recommending it, just saying kind of incredible, especially since people kind of do it anyway, and then they have to like disengage autopilot and they start driving with their knee. You know, Elon's lamented about that before. Like, it'd be safer if people are going to text and drive with autopilot on rather than off. So, you know, if that's safer, do we save lives by just leaving autopilot on? Probably. Of course, the extreme answer is, well, nobody should be texting and driving, but let's be real, like pretty much everybody does. So, doesn't make it okay, but it is what it is. So anyway, obviously, the big next step is, can we get to the no safety monitor stage? And what's gotten a lot of people really excited right now is this particular video right here, which says, just saw a Tesla with no one in the car. And this got a lot of people very, very excited. Now, there are some asterisks in this. First of all, this video happens to be posted by an account that literally has no history. Now, maybe they just ripped it off of Reddit or whatever, but they're implying that they saw this vehicle. And it happens to be followed by Omar. We're not sure when he followed, this account. But the point is, not only is it posted by somebody with no account history, you can clearly see there's a Cybertruck right here with somebody sitting in the back seat of the Cybertruck, ready to video this. I'm not saying this is necessarily rigged by Tesla where, you happen to have a follow car right behind it, probably with a kill switch and a Cybertruck right next to it to videotape it candidly. Who knows? Some people say this is rigged. Either way, the car is driving itself. In fairness, there's nobody there and the car is driving itself. So how rigged can it be? It obviously is. Now, is it possible that the weather was ideal and that, hey, maybe these were perfect conditions where they got out of the car, took the safety monitor out and did this small test of a segment? Either way, even that would be great. Even if these are all Tesla employees and the Tesla accounts, including their chief autopilot engineers and Elon Musk and the @Tesla account are all retweeting this message, oh, wow, look, a driverless car, who could have ever seen that? It is a sign of progress, right? You removed a monitor and there is progress here. Now, how does this affect the valuation for the company, right? Because obviously the valuation is what everybody has a question about, especially since we really want to see the stock price keep moving here. I mean, after all, we did see Ross Gerber here, right, on X, got the new Tesla FSD update, and within 2 minutes of driving into the sun, and it's the takeover error. And then he says, these cars can't drive into the sun. To which, of course, I appropriately and quickly replied with, we're not going to the sun, we're going to the moon. Anyway, let's talk about that valuation, because there's obviously, with Tesla, always going to be jadedness on both sides of the Tesla debate, and we really got to hit Tesla valuation. And I will say, I should probably also, just to make sure this is a thorough recap of what's going on with Tesla, I should probably also just briefly mention what Susie Wiles apparently had to say about Elon Musk. And I kind of think it's not a surprise. It actually kind of is probably good, because this is what we think about Elon Musk anyway, that he's, an excessively hard worker. But you're going to hear these comments, so I may as well address it, and then we'll get to the fundamental valuations. So in Vanity Fair, apparently the Vanity Fair reporter has been talking to Susie Wiles for a while about various different people. She says that Trump is like an alcoholic, although, supposedly he doesn't drink, just that his personality gets really enhanced all the time. She was upset about tariffs. She was upset about Pam Bondi's handling of the Epstein files. But this was interesting to me. It was that Elon Musk is a complete solo actor. Well, we kind of know that. We know that Elon is basically if anybody's going to get it done, it's going to be him. Now, she goes on to say that he's sort of like a jacked up vampire, kind of implying that he doesn't sleep because he's on drugs all the time, which she does go on to literally say. The challenge with Elon is keeping up with him, she told me. He's an avowed ketamine user, and he sleeps in a sleeping bag in the executive office building in the daytime. He is an odd duck. I think geniuses are. It's not helpful, but he is his own person. She bagged on him for how quickly he shut down USAID. She thought there was a better approach than just going in and firing everybody and locking people out of their offices, especially since immunization programs being halted in Africa would lead to the death of many people in Africa, which, of course, then you get people on the other side who they're like, why are we immunizing people in Africa? And then people on the other side say, because that's called diplomacy, so we can put the US label on it, so hopefully we breed fewer terrorists in the world. You can make arguments on many different sides, but this is a freaking Tesla video, okay? So anyway, Elon's attitude is you have to get it done fast. If you're an incrementalist, you just won't get the rocket to the moon. And so with that attitude, you're going to break some China. But no rational person could think the USAID process was a good one. So Susie kind of has some not great things to say here about Elon. It's kind of like not great, not terrible, kind of like the economy right now, like not great, not terrible. Yet. Hopefully we kind of keep staying up. And I don't really love where Axios is going, because I do think this creates some risks in 2026 that if Elon Musk is going to get back into politics, I get nervous because we've had some really negative price action in Tesla the last time Elon got into politics. Remember pre-liberation, Elon got into politics, and what did it do for the stock? It's like when Elon's not involved in politics, this stuff goes to the freaking moon. I mean, 480, this is freaking awesome. But, you know, what happens if we go over here to, oh, Elon's going to get into politics, like after the first 1 month rally of us hitting all-time highs, when he actually got into starting working at Doge, this crap went all the way down to $218, man. That's like a more than 50% decline. I mean, gorgeous breakout over here off of 347 on Robotaxi progress is why we had this breakout over here. Really awesome breakout. Now we're in no man's land on a technical basis. We have all-time highs to cover, and that's it. You know, which we're within, you know, now $10 of during the recording of this. But that said, you know, seeing Elon potentially get back into politics, I'm not really happy about this, right? Like, Elon Musk has begun funding the GOP's House and Senate campaigns for the 2026 midterms. He just can't stay away. Musk, who threatened to launch a third party and support challengers to Republican incumbents during his dispute with Trump, is now firmly back on the GOP's plan. Basically, to maybe try to get back in the favor of Donald Trump, he's got to now spend more money to prop up the Republican Party. So I don't love hearing that. You know, at the same time as obviously I don't love hearing that people are walking away from electric vehicles. And I get it. Like, you know, I think the first people who bought electric vehicles, myself included, were kind of the easy wins. You know, first time I bought an electric vehicle was back in 2017, all electric. And I had a hybrid before that, you know, the Prius. Y'all have, okay, I shouldn't say it. I shouldn't do the dad jokes. But anyway, you know, Tesla is right now announcing that they want to move battery production to Germany. I'm literally getting this across the tape right now. Creating conditions at Gigafactory Berlin-Brandenburg to produce up to 8 gigawatts of battery cells per year starting in 27. This is the end. To this end, we are investing another 3-digit million amount in battery cell production. That's a weird way to put it. So many hundreds of millions of dollars going to battery cell production in Germany. Okay, that's fine. So, like, you know, what, like, where do we stand with politics being a negative now for Tesla? Where do we stand with the valuation of this company? And, you know, really, is it reasonable that people are walking away from electric vehicles? I mean, you've got the European Commission pulling back on their 2035 targets to phase out ICE vehicles. Now we're extending those, basically allowing people to, you know, focus on hybrids longer term. Ford is going into hybrids. Remember, the last executive at Toyota, Mr. Toyoda, got booted out of Toyota because he said hybrids were the future. And everybody laughed at him during the Tesla boom, and they're like, yeah, right, bro. You guys are just pissed you're so behind at Toyota. Now, Toyota has a very reliable car. It's a fantastic vehicle. Like, if I had to buy a car, you know, if there was no FSD, if I had to buy a car, I would buy a Toyota all day long. You know, assuming I didn't need like the practicality of like a Sprinter van or something, you know, which I also had to buy. But then again, I got a lot of children, you know, 7 children, yeah. But anyway, like, there are maintenance issues that create some problems at Teslas. You know, I wrapped my Cybertruck. I love my Cybertruck. I wrapped it, and we take it into service, and they're like, oh, we need to take these panels off because they're recalled. And we're like, yo, what the hell? We don't want these panels off, because if we take the panels off, then we're gonna have to go take these back to LA to get them wrapped by the wrap company, just for that stupid part. It's like, just leave it on. And they're like, oh, well, it's gonna fall off. You know, it's a recall piece. It's like, this is a pain in the ass. You know, those are somewhat the quality things that unfortunately, you know, people do lament about, and they are legitimate issues that we're kind of concerned about when it comes to Teslas. Now, Toyota is gonna have its own problems too, but maybe not as many. Like, something that's been really driving me nuts lately, and eventually I'll get it taken care of, but my Tesla, the back trunk leaks when it rains. And it turns out that when they installed, I filmed this on my glasses, so the footage isn't that great. I've got a rack on the back, you know, like the Cyber rack or whatever. It's fully wrapped. It took forever to install this. The Pelican case on the top. See that right there? That's a whole seal section that's missing at the back of the tonneau cover. So when it rains, it just rains right into there, which is really annoying because it was a little bit of a mess, but I had a bunch of junk back here in the trunk. And, you know, I was looking at some of the stuff that I had back here, and I just had some miscellaneous Lowe's bags and stuff. All of them were soaked. I think when I picked up this right here, look at this. You could actually see, let's just kill volume there for a moment. You can see if I just sort of poke it, my finger goes right through it because it's all wet. You know, so I've spent a lot of time kind of customizing this to where I have a lot of practical real estate things, like my ladder is tied up on the right over there. I keep things in the back here, like spare faceplates and smoke detectors and things, just so when I go to rental properties, I can easily drop them off because I always need like one extra faceplate or a Sharpie or blue tape or whatever, right? And it's really annoying, so I always like to keep it back there. But it all got soaked because it got rained on. So, you know, there are some service complaints, and like, I'm not really happy with our local service center, and then I promise I'm gonna get into the valuation. You know, we bring the car to the service center, they're like, you need to empty all the trunk. So we drive it back, round trip for an hour, empty the truck, go back, and then they're like, you actually need to remove the whole rack. And we're like, what's your freaking problem? We just U-turned for an hour for you to tell us that. Like, get your act together. And so now, you know, it's gonna take 8 man-hours to uninstall the whole rack just to fix their dumbass problem. But whatever, it is what it is, right? So those are just, I think, the things where people get nervous about being those next adopters of new products. Because the Cybertruck's obviously a newer car, although I will say when I got the Model X in 2017, it also leaked, and it was also missing a water seal. So maybe, shame on me, right? Fool me once, shame on you. Fool me twice, shame on me. I actually made a video back in 2017 of my Tesla leaking because they forgot the rain seal. It's crazy, like full circle, right? But anyway, all that aside, let's actually talk about the fundamentals of this. Somebody says, Kevin, just park it in the garage. Okay, I don't have a driveway, okay? Like, I don't blow money on houses other than investments. I spend more money on rental properties. Well, House Hack does at this point, you know, that's not me. But we spend collectively more money on rental properties than we do certainly on ourselves or anything, right? And that's how it should be. We're big fans of investing and buying the dip. We like fixer-uppers. We're ending our fundraise for House Hack at the end of the month. But anyway, let's actually get fundies here on Tesla. So when we go into the fundamentals of Tesla, at least we have fundamentals. Unlike this 21 Capital scam, I don't even know why I still have this up. Let's close this down, because that's a real scam. But let's focus on Tesla here. So first, what I'd like to do is I'd like to analyze the margins going back to their second to last earnings report. And we're doing that because we didn't get the $7,500 boost of expirations, right? And there's some really important takeaways when we look at the fundamentals here. So first, we're eventually going to lose all of these automotive regulatory tax credits. We know that. We have gross profits of about 14% on vehicles less regulatory credits. That's actually not bad. Like, we are contributing to gross profit by selling cars. I make the argument that this company is a $500 million car company. Sorry, $500 billion, I did it again. $500 billion car company and a $1 trillion startup. And you'll see why in just a moment. But overall, your pricing power was actually relatively stable going into Q2 on a gross profit level, and vehicle gross profit was relatively stable. And that's excluding the automotive regulatory credits, which is great, because then when we went into Q3, we also got a nice pump because automotive sales were able to skyrocket because of that expiration of the $7,500 pump, right? Which is great. That said, you know, overall, the gross profit that we had here, I don't know why this keeps scrolling down to the crypto page, it's really annoying, which is gonna be a factor we have to talk about as well. Their total gross profit, no, it actually ticked up a little bit. So let me get rid of that side note over here. Oh, I think it's because it's got the little search feature there on the side. Oopsies, there we go. So let's get rid of that. Okay, great. So our gross margin for autos actually increased slightly into the third quarter from the second quarter, which is fantastic. Still doing it over here. And if we look at January, and these are sort of like some of the headwinds we have to know that we are going to go into a period of time with fewer tax credits, a potential $170 million crypto hit. That's why we were searching for crypto, is because we have about $720 million of Bitcoin as of September 30th. But Bitcoin was trading for about $114,000 per coin then. Now we're sitting at 87.5, 87-ish. That's a loss of about $170 million. So we're going to see a decline from fewer credits, so likely lower sales, a crypto hit, and likely lower cash flow. Now, I don't actually think it's possible for our gross profit to go negative. Some people, like the Motley Fool did an argument about how, they said something about sales going negative and like gross profit, whatever. I don't think it's possible for gross profit to go negative because frankly, if you look at the gross profit on vehicles, we're actually only contributing about $3 billion of gross profit, or about $3 billion of that 5 is coming from car sales. Which means even if car sales went to 0, they would still be gross profitable. So there's really no chance of them going negative on a gross profit side. But yeah, dude, their net income is going to get hit. If their net income falls, by 500 mil, wouldn't be a surprise to me. If we get a decline of about 1/3, 20% to about 1/3, somewhere between -20 to -33% in car sales, the worst thing that's really gonna happen here is we're gonna see free cash flow go negative. And free cash flow is important to look at. So the last free cash flow report was great because we had the expiring tax credit. We had like $4 billion of free cash flow. Phenomenal. That was over a 9-month period. If you divide that out, works out to about 1.3 per quarter. Even if you said that was all because of that one quarter, we really have to cast that out as an anomaly because of the expiring tax credits and the rush to buy Teslas. So that's why I have the 2Q report here, the second quarter report here. And if we look at free cash flow and you subtract out the tax credits, you're really only sitting at about $400 million of free cash flow per quarter at Tesla. Now, out of Mag 7s, it's kind of crap. But that makes sense because they're a manufacturer. They're building. Some people call them the world's vending machine, right? So Google has free cash flow in one quarter of 18 billion. Nvidia, 21.3 billion. Apple, 24.7 billion. Even if Tesla kept 4 billion, they would still be the stepchild of free cash flow in the Mag 7. So free cash flow lags substantially at Tesla. This means we're not really driving Tesla's valuation on the basis of cash flow. And that should be obvious at this point because if you look at a PEG or price to earnings growth ratio at this company, of course we're not valuing Tesla based on their old numbers. And these are based on forward earnings, by the way, for the end of the year, and then looking at about a 42% growth rate for Tesla on EPS over the next 4 years. You're looking at a PEG ratio for Tesla of 6.7. 6.7! Bullish moon! Anyway, it's really high on a price to earnings growth basis. Now, Nvidia's price to earnings growth basis is 1.5, and Google's is 2.2. And so if you actually look at this as on like a price to earnings growth basis, this suggests that Nvidia has 71% upside, Google has 18.6% upside, and Tesla as a manufacturer actually has 75.4% downside. And 60% downside if you value them as a service provider rather than a manufacturer. See, the upsides here I calculated at a PEG of 267. Manufacturers I calculate at 167. That's where I get my math from, right? We break this down every day in the course member live streams in our alpha report. If you're not part of that yet, make sure you join at meetkevin.com. It's where I upload these financials as well, so you can get this sort of history of them. But obviously, Tesla's not going to be valued off free cash flow. Tesla's not going to be valued off their PEG ratio, and they're certainly not going to be valued off of their net income margin. Tesla has a net income margin in the second quarter of 5.29%. That actually worsened in the third quarter. We got to a net income margin of just 4.9%. That means only $5 out of every $100 they make is actually going to net income. Unfortunately, Nvidia, as a comparison, has 55 cents out of every dollar coming to the bottom line, and Google has 29 cents coming to the bottom line out of every dollar. Apple's somewhere in the high 20s. Microsoft is in the 30s. These companies are bringing a whole lot more on the Mag 7 basis. Netflix is another one. They bring a whole lot more to the bottom line in terms of free cash flow and EPS. So why the hell is Tesla at all-time highs? Well, it's because this is a $1 trillion startup. That's what you have to understand. This is the pump factory. I'm not saying it's bad. We're just saying it is what it is. Okay, so Tesla's pump factory, let's understand this. This is the pump factory. So suggesting that Tesla shareholders could get early access to the IPO for SpaceX. I made a video, you can check it out. It is, just type into YouTube, Meet Kevin, SpaceX 10X or whatever, and you'll see the video. In it, I talk about how my venture capital company has invested in SpaceX. You know, we're probably a 3 or 4X on that investment. We've also invested in Apptronic, which was a robotics startup that was about to go bankrupt. And now they've like 4 to 5X also, which knock on wood is great. And they're doing really, really well right now. But if you look at those are both private startups. Tesla is basically a public startup. You don't have to know a banker at Morgan Stanley to get access to these. You don't have to fly on your plane to visit Apptronic and sit down with the CEO of the company and basically go, you know, if you guys don't get this money, you guys are effed. And how can we help you, right? Like, that's what I did as a venture capital person. I sat down with the company's executives and decided to make the investment, right? So, like, with Tesla, you don't have to do that stuff. You don't have to hop on a plane and do those things. You just swipe up on Robinhood. And what do you get? Well, you get potentially this idea of early access to SpaceX. You get this no driver enthusiasm for robotaxis and maybe the cyber cab, the spotting. I think it's a little bit of a stock pump, okay? We know bad news is coming. Elon getting back into politics, the valuation is at all-time highs, the stock is at all-time highs, and the numbers aren't that great. The free cash flows, the net income, none of those things are that great. What is nice is they do have cash. I will give them credit for that. We've got free cash of $18.7 billion. Don't be confused or misled by people going, Kevin, you have $40 billion in cash, but you got to take off the bills. Okay, if you have $100 of bills and $120 on your desk, you really only have $20 of free cash, right? And Tesla's got about 2 to 3 years of free cash, even if they started losing money on free cash flow. So I don't think that them going negative free cash flow is that bad. I do think the loss of the $7,500 tax credit, the 0% APR financing they're doing on the new Tesla at $39,900, which I think is overpriced. It should be lower than that. I do think that the Bitcoin loss that they're going to suffer will show up in EPS. They're going to take that loss. And their margins are probably going to compress on autos, right? Like, all those things are negative tailwinds, but that's the $500 billion part of the business. The $1 trillion part of the business that people want is the Optimus robot and the potential that this could be a robotaxi company. That's what people want. People don't want to hear anymore about, how Waymo is winning because they have LiDAR sensors and they cost way more. This is old news. We already know about this. Rivian tried to slam Tesla. Did you hear the slam? I mean, let's look. Rivian pumped, by the way, at least somewhat on this. I mean, the stock is sucked, right? Tesla's at all-time freaking highs. Rivian is basically at all-time freaking lows. Not quite. All-time lows were $8 or $17, but they were once at $180. I remember shorting them over here. We talked about that in our course lives too. But anyway, they had this big pump because they have this autonomy day, and they're basically full U-turning the pump. Now, what did they say in the pump? Well, what they said during their autonomy pump was LiDAR, baby. Here it is. Oh, sorry, I meant to expand this sorry, this is like our whole reinvest course. This isn't even all the videos. I did a whole new course in the Meet Kevin membership for all the course members who are in there. It's like 4 hours or whatever. But anyway, I saved this clip from Rivian. So let's play this portion of their autonomy day here. And this is the part where they get applause and the stock pumps a little bit. But any Tesla investor is just going to roll their eyes over this. But let's listen to what they say and how they try to slam Tesla, indirectly, kind of directly.
The LiDAR.
Are your eyes rolling yet? Told you your eyes would roll.
The LiDAR is an optical sensor, but its strength comes from the fact that unlike the camera, the LiDAR has an active light source, enabling it to see it much better in the dark. Another advantage of the LiDAR is that it can provide a three-dimensional view of the world, unlike cameras, which we know provide a two-dimensional view, requiring the AI models to infer the depth, which they do, but with a lot less accuracy.
Okay, so there's a point to this. The point to this is Ross Gerber's problem could potentially have been solved by LiDAR. You know, people bag on Ross a lot when it comes to Tesla, but I think he actually makes valid points. The fact that his windshield was dirty, in my opinion, didn't really have anything to do with the fact that the car, which has forward-facing cameras and side cameras, has trouble seeing in certain light environments. The lady's probably right. The inferences that you have to make with a camera are going to be less accurate. We know this. Nobody really cares who's investing at Tesla, though. You know, nobody really cares about this or the windshield dirty, this, that, or whatever. You know, and obviously we could joke about we're going to the moon or not the sun, but Rivian's probably right. You could probably get better accuracy with the LiDAR. But the question is, do we need that better accuracy? And that's the bears versus the bull debate on Tesla. Tesla bulls say we don't need it. We have enough accuracy. The car can drive itself without LiDAR. And then, of course, you have the flip side that says, why don't you just use NVIDIA's neural nets for autonomy? Well, maybe because Tesla has way more data, but why not just use NVIDIA's neural nets, which can then, you know, put all of this information together? And I will say, I can somewhat corroborate, which I just caught up a few days ago. I don't know if like better sensor data would have fixed this, but this was a little oopsie doopsie that I had to take over on. I mean, not the end of the world. Stuff like this happens, but this is the kind of stuff that really needs to stop happening for us to go, you know, fully autonomous comfortably. This is version 14 on the Tesla Cybertruck from Sunday, December 14th. So that would be 2 days ago. So this was the forward-facing shot of my Cybertruck. And I'm on autopilot. And you'll see right here, this lane is going to come to an end. So you can clearly, very clearly see the arrow right here. And I have to take over. So once we, you know, start going to the left, I end up taking over because I'm like, this is lame. But anyway, I'm on autopilot to go, you know, follow basically this blue car because I don't want to drive into this neighborhood. I want to go home. And the car kind of totally misses 2 arrows, 3 arrows, and then it decides to jump over into the right lane over here, which is a right turn only lane, even though the nav is set to go straight, right? So like, you know, would other sensors help this? Is this just more training? I don't know. It never used to do stuff like this. So, and I think that's one of the frustrations that some of us see with FSD is that we're kind of sometimes, it feels like going 2 steps forward, 1 step back. And it's kind of like, all right, when are we going to be done with the 1 steps back? Like, this is kind of getting exhausting. Like, I don't want to go 1 step anymore back. I just want to go forward. But, you know, I think we're making decent progress. And the more of this progress we make, the closer we can get to, well, frankly, having fully self-driving cars. Are we there yet outside of kind of like a rig demo? Probably not. You know, we probably still have some work to do with that. Is there always going to be a complaint amongst, you know, the service for, here, I'll show you my Tesla and some of my rigging around it. Is there always going to be a complaint about service? Honestly, yes. You're going to have that kind of complaint for any manufacturer, whether it's a Lucid or a Rivian. Like, you're always going to have manufacturer issues. It's just the question is, what is the incidence of issues? You know, the leaking car and the service around that, frustrating. Because look at the car, right? So this is my Cybertruck. I put a lot of energy and time into this. This rack is very frustrating because it's so tight to the glass right here that you worry about breaking the glass. It's very hard to uninstall this and reinstall this. I got the Starlink installed right here. It's fully wrapped. They're telling me this is the panel that needs to be removed and it's going to destroy the wrap because that's recalled. The back of the car leaks the tonneau cover. I'm like, this is, you know, those are just the frustrations of buying a, you know, December 2024 Cybertruck. So I asked Gemini to solve the problem for me. This is how Gemini solved the problem of my leaking trunk. So I guess with that said, that's my full breakdown of what's going on with Tesla. The valuation is a big fat risk factor. We know that. We know that Elon getting back into politics is a risk factor. We know crypto is going to be a negative EPS. Wall Street is guiding for positive EPS at next, this quarter. They're looking for 1.584 billion of net income on the adjusted basis. And so, there's just something to be desired on those numbers. I think we might have a miss on those earnings. And it would be reasonable. I think most long-term investors would anticipate that. I guess I would say, like, if I wanted more exposure to Tesla, I would certainly wait for a dip to buy more than sort of hop on the bandwagon, especially with some of the larger issues that we have in the space of private credit or otherwise. But with all that said, hey, if you want to invest in my real estate startup and our AI release, go check out househack.com or reinvest.co. It's the same company. Our fundraise is ending at the end of the month, and we'd love to have you. If you do click the invest button, you could also buy the lifetime access to our AI. But if you do click the invest button, remember that you get a 5% yield through the conversion of the stock paid out on a monthly basis. You get all the upside in the stock. Real estate backed, invest with credit card, ACH, or wire. No fees to invest. I don't recommend, obviously, go into debt and obviously read the offering circular. I'm personally very excited about what we're doing with our artificial intelligence. It's made a huge game changer to our Q4 income already, and we expect that'll continue as we keep releasing